Federal Reserve is going to be meeting this week. The central bank expected to hold rates steady, but could signal a cut in the next meeting in September. Joining us right now is former Fed Vice Chairman Roger Ferguson. He's a CNBC contributor. And not to put this in Olympic terms, but I think of the board of the Fed sort of as the judges, if you will, of all this, Roger. And we're trying to understand what we may hear. I assume we'll hear nothing for now, but the last time we spoke, you felt things were getting good enough to cut rates. The question I would ask you is whether you think that comes before or after the election at this point.
Well, first, bonjour, I must say. Look, I think the cut probably comes in September. It's what the market is priced in. I think the data on balance would support that. And if they're not going to do it, they're going to have to signal pretty clearly and push back hard against the market. So count me in the camp of many that September's likely the first move.
And what would have to change in your mind if that were to get delayed at all?
Well, I think they'd have to see a series of really strong reports, which seems sort of unlikely at this stage. That includes, obviously, the upcoming labor market data at the end of the week. I think there's at least two more actually inflation reports that they'll have to see. But look, the data are mounting up, as I say, on balance that they should probably cut. We see inflation itself stable or coming down. Goods prices, which are an important part of this, given that services are relatively sticky, good prices have been moving in the right direction from their standpoint. And we've also seen, some beginning of weakness in consumers. The consumer sentiment numbers from Michigan were relatively weak. So I think there's enough evidence for them to go ahead and cut unless there's something dramatically different in between.
Roger, we've always talked about the politics of this, and that's why I asked you about the election, about whether you think whether these things factor in. And the reason I ask is because you've had folks like former President Trump say that he hopes they don't cut before the election, and then you haven't heard from our current president or what is likely to be the nominee on this issue. But you don't think that factors in at all to the conversation, or even privately when people talk?
Look, I've never heard it mentioned, to be fair. You don't know what's in people's minds. I think this time, for sure, the data are strong enough and the market expectation is strong enough that a September move is very much baked into the cards, and therefore, in that sense, sort of apolitical. If it was a close call and no one knew exactly what to do, you can imagine, all sorts of factors coming into people's minds. But this one seems, unless there's something really surprising that occurs, this one seems, almost, it's about as done a deal as one can see in central banking. So I think the odds are still in favor of September cut.
I'm curious why it's obvious to you now. And the reason I say that is, historically, when we've had these conversations over the last 2 years, the market's done one thing, and you've often come on the air and said, you know what, the market's got this wrong. Like, they don't really understand what is about to happen here, which is to say usually nothing or less or something less optimistic than what the market's looking for. What has flipped for you?
Two or three things. One is the commentary, I think, has been pretty consistent. Secondly, I think the economy is clearly showing some signs of slowing here and there. Saw a very good GDP report, let me be quite clear about it. But this consumer sentiment number, I think, is relevant. Yeah, that's fair. I think that slows us down a little bit. But the consumer sentiment number has come in. Inflation clearly is coming down, though very slowly. So I think I would use the word that the market and I would say the data have given them, quote, permission, maybe, to move at this stage. And I didn't see that before. I thought the market was much too optimistic about where things were headed. I think right now the stars are pretty much aligned to make a September cut far more likely than not.
Okay, so one last final question. You like the cut, or you think a cut comes in September. What about again in November? And how much does that matter in terms of where the market's already gone?
I think there will be on pause in November. I think they're setting us up basically for two cuts this year, one September and one probably December. But they're going to be very data dependent, for sure. So I wouldn't say November's definitely out of the possibility. I think the way things are progressing, they have the ability to move in a sort of gradual but very definitive pace. So I'm in the two cuts this year camp. One in September, probably the second one in December. But we'll let the data speak for itself on that one.